Hey everybody, what's going on? I am Chris Flowers. I'm the executive producer of the Biz Coach Show, and we are here with the one and only founder of Eric T. Whitmoyer, founder of the Biz Coach Show and My Biz Coaches. What's happening, boss?
How you doing today, Chris?
I'm doing all right, man. We're just making things happen. You know,
That's right.
We're making old things new, right? And we got on Chris Kurnat. He is the founder of Kernat Consulting. How you doing today, Ben?
I'm doing good. Thank you guys for having me on. I'm excited.
Yeah, I appreciate it. Appreciate you making the time. All right, I'm just going to read you in real quick. Chris Kurnat is the founder of Kernat Consulting, a bookkeeping and accounting firm that focuses on service-oriented businesses and real estate investors. All right, gentlemen, I'm going to drop off and you guys do your thing.
Awesome. Thanks, Chris. Appreciate that.
Gotcha.
Chris, welcome to the show. Glad to have you on. Long time coming. Probably could have done this like a year ago.
It's probably good that we didn't do it a year ago, but yes, yes, this is a long time coming for sure. I'm super excited to be here. I've already told you, this is my dream, is to help as many business owners as I can scale and get to where they want to go. So this is a great step in that direction. So I appreciate the time for sure.
Absolutely. Absolutely. Yeah. Looking forward to their conversation. I know you and I had numerous conversations as it relates to these topics we're going to cover today. So with that, I just take a few minutes because I know you have kind of an interesting background and how you got into this. Take a few minutes to kind of share with people how what you did to get to where you are today, and maybe some of the changes that you went through. Again, remember our audiences are business owners and some maybe aren't quite where they want to be yet in that process, right? So they may be going through some of their own learning and or adjustments in their business model. How they got to where they are. Some people are still working in a corporate environment and debating on whether or not they should go into starting their own business. And to them, I tell them, no, don't do it. I'm totally kidding. But I would say, make sure you know what it is you want to do and get a clear understanding of what it looks like so you can get the best experience from it. So please share a little bit about your how you got into what you do today.
Yeah, I think I'm glad I have a platform to share this because I have a little bit of a different way. I found my way into business a little bit differently, I think, than most people do. It's not necessarily the smart way to do it from a financial sense. I was in construction before this. I'm a civil engineer background, went to Penn State. I was in construction for 4 or 5 years right out of college, doing project management on heavy civil infrastructure projects. Moving around all over the place, had no way to start a side hustle like you should. I was working anywhere from 60 to 80 hours a week and moving around all over the place. We're on night shift for a while. I mean, who's going to start a business on night shift? Maybe somebody, but not me. I was pouring myself into the business at the time or into the companies at the time and learned some hard skills and soft skills that definitely helped me out in entrepreneurship, but didn't necessarily, figure out what business I wanted to start while I was in construction. All I knew, I just didn't want to start a construction business because the time demands, the location demands was just not congruent with what I wanted to do with the business that I wanted to start. So, I couldn't start a business on the side, but I was making good money in construction. So I figured, okay, let me save up some money and then I will quit cold turkey and figure out what business I wanted to start. So that was about 3 years ago. I quit cold turkey and had no clue what business I wanted to start. Again, anybody listening to this, don't do this, but I had to do this. I was kind of, stuck working tons of hours on the projects. And so I quit and I moved to Arizona. Didn't know what business I wanted to start. I just started doing everything. Reading everything, listening to everything, talking to everyone, drove for Uber, talking to people in Uber, just trying to figure out like, what do different people do? I kind of got stuck in the construction world while I was there. And I knew there was so much more out there that I wanted to explore. So just having a ton of conversations. I did taxes for a while. I worked for a bookkeeper. I taught piano lessons. I drove for Uber, any kind of way to make money while I figured out what I wanted to do. And then a little over 2 years ago, I said I worked for a bookkeeper and did some taxes. That's when I realized I had strength in finances from the construction side of things. I had the entrepreneur mindset from the construction side of things. So I decided to go all in on the bookkeeping and accounting aspect of the business and helping small business owners. I knew business owners were my jam. They were my people. And so, yeah, now I get to live the dream, helping small business owners with basically any problems around their finances with regards to bookkeeping and accounting, integrating things, understanding how to read their financial statements, understanding what they need to do to scale to the next level, working with CPAs to make sure the books talk to the taxes, introducing people to CPAs, the right CPA, navigating the small business landscape with regards to financials.
Yeah, great. Awesome. I appreciate you sharing that. And to your point, right, kind of a unique way to get to where you are, right? So I remembered that about your story, and I'm like, that's actually a really good piece for you to share, because I think often, and by the way, it may not have been the ideal way, right? To your point, you may have thought, well, I should probably do a side hustle, but I will say that there's value in both strategies. Having done both myself personally, the all-in strategy is valuable in the sense that once you're all in, some of the distractions that have a tendency to get, when you have a job and you have a regular income, there is a sense of comfortableness that you get lulled into, and you're not pushing your side hustle as hard as you need to. Absolutely. Right? I got the bills paid. I don't have to. So there's some sense of urgency when you go all in to be like, yes, oh, I have zero revenue. I need to figure this out quickly. But it sounds as though you went in and with your background, likely had some money set aside and enough runway for yourself to give yourself the opportunity to figure that out, which I think is part of that challenge. Most people, and I may have shared this with you before in the past. I know I've shared it on the show, but most businesses are started, when I say most, 33% of all businesses started, this is an SBA statistic, start with $5,000 or less when they start their business. And then of course, 82% of the businesses fail because of financial issues. Now, we had that debate the other day at lunch. As a matter of fact, is it because they mismanaged the funds, or is it because they didn't start with enough money? Either way, not enough runway is an easy way to go quickly out of business. So good conversation. I think it's valuable for people to hear. There are different ways to get to where you want to go. The key is identifying for you what's the best path, right?
Yeah, exactly.
Yep. So you said you love working with the business owners. They're your people. You want to help them identify how to manage their finances. And so quickly, I say quickly, but give us a quick overview of some of the key things that you really focus in on with your clients. What is it? Where do you start with them? And what does that look like when an engagement?
Yeah, compliance is a good place to start. It depends on the client, right? So I guess you would have to, in order for me to give a perfect answer for that, you'd have to describe the client and the situation that they're in. But I'll describe a kind of an avatar of one, and then how I would do to start. The typical client tried to, everything that I do kind of floats around the financial statements, right? And when you start your business, you're typically doing your books on Excel, which I'll label as a single entry accounting system, right? Which is great when you're starting out. Maybe there's some other single entry accounting systems out there too. I used Hurdler when I was starting out. There's a bunch that you're just categorizing transactions, right? And you're putting them into very bare bones buckets, the ones that will be on your tax return on Schedule C. So you have basically all your income in one bucket and then expenses into a few different buckets on Schedule C. So when you're starting out, that works. That's what you want to do. Where I usually run into people is when they are trying to move from a single entry accounting to a double entry accounting system and going into QuickBooks. Particularly, I work only on QuickBooks Online, but there's a bunch of different double entry accounting systems out there. Xero is another one. So once you're in double entry accounting land, I've made this complaint to you. QuickBooks likes to make it sound like, oh, just you do your books on QuickBooks, and they don't talk about that transition from Excel to QuickBooks is a huge leap, right? So navigating this leap is probably where I would say I start with clients that are on that scale, right? That are moving from single entry to double entry accounting. So literally just explaining the difference between the two. Would you like me to kind of paint that out, what I typically do with clients? You think that will be of value?
I think that'd be valuable. Yeah.
Okay. So single entry accounting, like I said, you're just recording, you're creating a general ledger, and it's created from the data you get from either your bank statements or maybe you link something and you're just recording it to a general ledger with one entry, right? Double entry accounting systems like QuickBooks have two entries that you are reconciling the two. You probably have heard a lot of people have heard the terms reconciling bank statements, reconciling credit cards, reconciling loan accounts. So the power of QuickBooks and of accounting softwares is that you have two ledgers that you're comparing. One, you create the general ledger using your bank statements, or whatever system. A lot of times they're linked in QuickBooks, or you're integrating, you're pulling in transactions, whatever you create. So you post the transactions to the general ledger, and then you take a bank statement or a credit card statement and you compare the two. And if there's discrepancies, then you flush that out during the reconciliation process. And what people don't realize is how many discrepancies there are when you're using single entry accounting. And so there's a lot of headaches, first of all, in that transition if you're going to do it yourself. Secondly, there is a lot of misunderstanding about what the value that bookkeepers and accountants provide who use double entry accounting system. So making that leap from the single entry to the double entry, I usually start there, just describing what is it that I do, why am I asking for your statements, what is the power of it, and this all goes back into backing in one step before that is balancing the accounting equation, which lives on the balance sheet. In order for you to have a system of debits and credits that satisfies the accounting equations, which is assets equals liabilities plus owner equity, you need to have the system of two ledgers that flushes out any errors, because if something doesn't balance, every single transaction is a journal entry, has a debit and a credit. So if you have a mistake somewhere, then you won't be able to balance your accounting equation. And therefore, that's why the single entry accounting system, you grow out of it once you need a balance sheet, an accurate balance sheet, once you need accurate financial statements, once lenders come into the mix, once you convert to an S corp where your balance sheet goes on the tax return. There's different headaches and things where you bump your head into as a business owner where you realize, oh shoot, I can't get away with Excel anymore. And so that's typically where I start with clients.
Fair enough. I appreciate that. I think you could teach a class on that. You'd be really good at it. That was very good. I think what's interesting about that, and you mentioned some things that I actually forgot. And as you know, I did do accounting many, many moons ago, and it's only relevant to me because of the fact that what we do as a business coach is it often becomes a conversation about who's doing your books. And as I've shared with you many times, and I share on the show many times, often it doesn't take much for me to identify that somebody's working with an accountant, a CPA, who predominantly just does tax preparation. They don't actually do any real analysis of the financials. And consequently, the downside to that is the business owner thinks, well, I'm working with an accountant. They know what I need to know, and that they may know it, but they're not sharing that information with you, because most CPAs that are set up to do tax preparation as their primary source of revenue as a business, they don't take the time to analyze your financials or help you identify the gaps in your model. And then to your point, balancing out things like, I've literally seen relatively good bookkeepers that don't understand how to manage loan balances, for instance, outstanding loan balances on equipment, or like in my case, a trucking business when I had the trucks. It's like, well, you maintain a loan balance and how that impacts the balance sheet, how that impacts, and what impact it should. You're like, I'm making all these payments, but it doesn't reflect here. It reflects over here, right? And it's like not understanding that the average business owner, I'm going to tell you, and I say average, it's like 80-20. 80% of them do not have any perspective of what that looks like, right? So to that point, they need somebody who's patient, we can help them understand that, has the insight and the knowledge, but then can also break it down in layman's terms, because the vast majority of them, not only do they not know it, they don't really want to know it until it becomes an issue. And then they're like, explain to me what's wrong, because it's broken and now I'm frustrated. Right.
Exactly. And I always try to sell them that they should want to be more financially literate, or more literate in accounting than they actually are, because that's the model that's always happened. I see that changing with tech and AI more and more, that I think people are going to realize they need, it's their business. They need to have this knowledge. You can't just outsource the knowledge, application, everything, every part of accounting and numbers for your business. You need to understand it yourself so that you can manage the people that are doing that stuff for your business. And like you said, yeah, a lot of times I get brought into the mix when that relationship with the CPA or whoever's doing the taxes is a transactional one, and they are just covering their butts from a compliance standpoint. But when it comes to day-to-day operations, month-to-month statements, like you said, a loan account, like understanding cash flow, how the statements tie together, anything that is outside of the world of taxes, that's when they fall short, because the CPA is going to explain it in the terms of in the rules that surround tax and what is going into the preparation of the tax return itself, which is super valid and super important, but it isn't the only thing that matters when you're starting and scaling business.
Yeah, absolutely. One of the things that I'll really love to hear some of your stories on this, but one of the things that we uncovered many times working with clients is that they don't, because they don't have a good handle on their finances, they don't actually know whether or not, for instance, a job is profitable or not.
Sure.
Like they go into it with the high level numbers and they know their back of the envelope math is relatively good. However, once they start factoring in, like they don't think about, okay, this particular cost distributed over however many jobs I do in a month needs to be factored in, like it's a fixed asset or fixed cost, right, that I have built into the model of my business. That needs to be distributed across all my businesses, right? Or whatever margin that I factor into a project is absorbing those costs, because there's still that. And you're like, well, I'm going to make, let's say it's a turf installation is a good example. I got my turf costs so much, my labor costs so much. The net of that is my profit on that job. That's not my profit on that job, because I have truck payments and I have insurances and I have whatever other operating expenses, and they don't know to factor all those numbers in to determine. And then they look at it, and then too many of our clients that we engage with, and I say too many, literally, if it's not 80, it may be 90%. They're like, I have money in the bank to pay the bills. I'm good. And I'm like, you're good until the market takes a 20% dip. Because as soon as the market takes a 20% dip, if you're operating anything less than, what would that be? I don't know. Let's just say simple math. If it's a 20% margin, if you're actually operating at 20% net margin and the market takes a 20% dip, you're now at 4 or 5% net margin. Right. And so now all of a sudden, oh, well, you can't make a living on that. That's a completely different, and they don't understand the math of that. And I think that, honestly, you mentioned cash flow. I'd say that's probably one of the biggest concerns that I see, is that business owners not only do not completely understand the difference between profits and cash flow, but in addition to that, they don't understand their business well enough, at least from the financial perspective, what cash flow, the impact of cash flow is going to have on their business, and they can't extrapolate out to project. And that's where I get frustrated with accounting services that don't do that, especially in businesses that have heavy seasonality or really big costs, like when years ago during COVID, the tariff impacts, right? You could project that out in advance and at least maybe early buy, go deeper into it if you had the extra cash to not have to cover some of those costs or whatever. But anyway, the point being is that most people don't have enough insight to be able to make those types of decisions, and that's where I see a big challenge.
Yeah, absolutely. I think the tricky part is, like you said, it's a holistic approach to tying all those things together. Yep. First of all, you breeze by some stuff I think we should probably drill into for the listeners. So we've got, I think there's some concepts we need to talk to people about. So first of all, there's the distinction between cost of goods sold and expenses, right?
Okay.
Cost of goods sold generally being tied, like in your turf example, the materials and labor that go into the delivery of that project, right? Then we've got expenses that are generally overhead. And so, that's going to be, like you said, the vehicle mileage and the software fees and the, office and admin related expenses. And so, first of all, getting that set up to where you understand on a financial statement, what is my business's profit margin, gross and net profit margin. So that, like you said, if there's any kind of change in a macro environment, you understand what are my direct costs that are tied to a project, how are they going to change, and what are my indirect costs that are my, like I said, my overhead. That is, I'm paying for, if I'm open as a business, I'm paying for this no matter what my volume is. So that's the first thing to understand. Then we talked so hopefully that tells people enough to understand about that. And that's all taken care of on the financial statements within QuickBooks, right? Just from starting to familiarize. There's another piece of that you talked about with regards to cash flow, that not every transaction that flows through your bank account is going to fall on your P&L. You talked about loan accounts, right? A loan account that has interest, is accruing interest, is going to be split between the P&L and the balance sheet. So there's going to be a portion that's on the P&L and a portion on the balance sheet. So I hear the same thing. A lot of business owners who are like, well, I'm profitable, but where's all my money going? Two things. They could either understand the fact that that money is paying down a liability that's on the balance sheet, so you won't see it on the P&L, or you have to understand how to read a cash flow statement so that you know where the money is actually going, where it's actually flowing to. Then you get a holistic picture of, gross and net profits of the business, right? So that's the first thing that I wanted to comment on. Second thing you talked about was like project costing, right? Like going into actual specific projects and understanding what are my direct materials, my direct labor, and my overhead for a particular project. That a lot of times that's the stuff I'm nerding out over right now with clients. So figuring out the system to bring that into the mix. I see it done on Excel. I see it done in operations platforms, depending on the industry. My niche that I'm diving into with that kind of stuff is like roofing companies, general contractors. Those are the kind of people that I think get the most value out of that kind of stuff. And you kind of run into that anywhere from $500,000 to $1 million revenue. You start bumping your head, like I said before, into the ceiling where you're like, what the heck's going on? So you're having to reconcile your profitability with seasonality with project cost. So on the project cost side of things, you need to understand what's my overhead, and you need to tie that into the actual financials, because it might be easy to capture your materials and your labor and tie it to a job, but that overhead that you're saying is kind of tricky. So you got to figure out a way to assign overhead using some accountant terms here, a cost driver, to figure out how to tie that overhead to a project to know what am I actually spending and what am I actually getting out of this particular project. And so tying that piece to the accounting piece, and then have it, like I said, it's a holistic approach you have to take to kind of understand all this stuff. So tell me, how the heck are you supposed to outsource that to an accountant, right? All those pieces to make those business decisions. That's why I think what people don't understand. So I'm glad I have the opportunity to nerd out on this stuff with you on the podcast. I think it's what it takes. It takes a lot of time and a lot of conversations to understand it.
Yeah, and it's actually a great question. As you say that, what would you say, you and I work in a similar fashion, how many conversations do you have with a client before you feel like you really have a good handle on everything in their business? Assuming each conversation was an hour long, how many conversations do you think? Is it 2? Is it 3? Is it 5?
Everything in the business, it depends on it depends on what everything is. It depends on what the business is.
Or the severity, but the complexity of the business certainly is a factor, right? But generally speaking.
Yeah. If it's one that I have an understanding of the business before going in, I could probably get a grasp in 1 or 2 hour long conversations. If it's one where I don't understand the industry, like software, for example, manufacturing, those two things, they're not my niches by any means. I would probably have to sit for 4, 5, 6 different hours to understand and really drill into things. So I think it comes back, which is another point we could talk about, is like the niche of your accountant. Your accountant should be at least attempting to have a niche. Because I can, that just goes to show you right there that it's 3 times as fast for me to understand a business if it's in my niche. But if it's not, it's going to take longer. So does your accountant have a niche? If not, you have to understand that so that you realize it's going to take longer for them to get up to speed. And they might only be able to provide you so much value if it's outside of their knowledge base.
Yeah, it's a great point. As you even say that, when I had my trucking business, I had a family member who's a really talented bookkeeper, had never done loans on equipment. So, and not only did I have, for my trucking business, not only did I have loans on the trucks, but I also had some were leases.
Yeah.
And then some of those leases had like a buyout factor at the end of it. So, right. Yeah. So managing all of those and making sure those were all tracked appropriately with an accounts payable process and everything like that, right? That's that honestly, because I haven't practiced it in so long, I know what it needs to be done, but how to actually do it, I couldn't do it. I certainly couldn't do it in QuickBooks, because when I started, it was the green ruled paper that I started with. So I couldn't make that happen in QuickBooks. I could, fumble my way through it, but even then it wasn't set up correctly. That's a perfect example of, if you don't have that understanding of certain components, you may not be serving the client as well. Which and the client, and we say this all the time, the client, the business owner, doesn't know what they don't know.
Yes.
So if they wouldn't know to ask that, they're not likely to get the answer needed, the answer they need to determine whether or not it's the right service solution for them, which is part of the frustration that I often have.
Yeah, absolutely. And a little tip I'm sure people are doing it, because I think a lot of your listeners are probably as excited about AI as we are, at least close. Maybe not as excited about AI as we are, but I use this all the time when I'm in an area that I know I don't know what I don't know. Is I start on AI, and then I ask ChatGPT, or for example, let's say in a business owner in this situation, let's say he's trying to interview an accountant. What are 10 questions I should ask this accountant? I have this kind of business, blah, blah, blah. So now you have a starting place. And yes, you might not know how to interview an accountant, but you now know the questions. And if you're a business owner, you can probably tell people you can probably call people on their BS. Right. So if you get those 10 questions, I guarantee you those accountants have never been asked those questions by a client before. They're probably used to just like, this person's got a pain point. They're coming, they're paying me money, right? They just get leads that come in. If you were to grill them with those questions and you talk to 3 different accountants, I guarantee you're miles ahead of the competition, and you'll find the right accountant. So just arming yourself with tools when you don't know what you don't know, I think is huge.
Yeah. And the irony of that is as much as you kind of joke that some people are excited about it, some people are not as excited about AI. They should be, because it would because again, what we identify is people who don't know what they don't know. If you don't know finance, it's often because you don't care for it. Right. You're not really interested in it as a passionate, the fact that I've analyzed more P&Ls than most people I've ever met in my entire life. That just tells you something about how crazy I am. But the fact that I enjoy it and would do it on the weekends for fun to analyze whether or not I thought a business was a good investment, really prepared me for what I do today, in helping my clients identify what could be wrong in their business and using the numbers to kind of paint a picture. One of the things I would ask you about that, let me finish my thought on the AI. The fact that they could use the AI to help them prepare for that interview, to your point, really valuable. Great point for you to point out, because I think that's an important component, because if I could at least ask some good, intelligent questions, to your point, my BS detector is going to go off and tell me whether or not somebody actually knows what they're talking about when I ask them about something that'd be relevant for my particular business.
One of the things, right before you move on to the next point, one of the things, just to give a specific example of a question that you might ask, I was doing like a mastermind with some real estate investors, because I do service-oriented business and real estate investors are my 2 niches. And one of the questions that I told them that they could ask is, what schedule is my rental property going on? What schedule on the tax return is it going on? And then you should know that, up front, whether it's Schedule C, Schedule E, or if it's an S corp or whatever it is. And if they fumble that, that's like, it's like you're hiring them for a job. So you have to interview them like, any kind of other contractor, any kind of other person that you're hiring. So you can even ask pointed questions that test their knowledge base and see how they fumble. So I just wanted to give an example of that.
Which is a great example, by the way, because there's lots of people with investment properties that probably don't even know the answer to that question.
Yeah. Mm-hmm.
Yeah, great point. So where I was going with that next piece was making decisions from data. I know I've shared with you a lot of my success in my career in the wireless industry was predicated on the fact that I could read financial statements really well, quickly identify where the shortcomings were between reading the financial statements and then looking at our sales metrics, our KPIs, right, for the business. Combine the two, I could identify where the gaps were in the processes on the floor, on the sales floor. And then a quick observation of 30 minutes to an hour on a sales floor, and I could tell you everything that was going on in the store. Now, that was because of the fact that I've been in the industry for 20 years at that point. I would say anywhere after the first 10 years, I was pretty competent in just about anything that was going on in the store. But my point is that level of data and insight into a business, be able to pull some key numbers out of it, would help me identify, let's say, for instance, going into a business, if I know, for instance, we're in Seattle, well, our rents in Seattle were often 30 to 40% higher than the rents that we paid in the Southwest, in Arizona and New Mexico and places like that where I originally operated in. So rents in Seattle were substantially higher. So if I looked at gross margins in either market, and then by the way, payroll, the hourly rate in Seattle and in the state of Washington was substantially higher by like $3 or $4 an hour in the concentrated area of Seattle. So the other problem that I ran into is that not only my payroll cost higher, but my rent costs were higher. But I could look at a store and we would see the revenue was exactly the same, but the profits were dramatically different. Ironically, a lot of my peers did not understand that. They couldn't because they didn't have the insight to those two metrics, right? Which are not really earth-shattering, right? It doesn't take much to figure that out. But if you don't have that premise of understanding, it's hard for you to make that distinction. So take every small business owner who has got store 1, open store 2, open store 3, and they don't have that kind of grasp of that knowledge. They could make poor decisions about opening locations because they're not making database decisions, which I know that's something that you're very familiar with, and I share your thoughts in that in regards to some of the information you share with clients and how you work with them.
Yeah. So database decisions. I mean, we could do the whole podcast on just database decisions. That is huge. I mean, that's what I'm studying. I've shared this with you. I'm studying for my CMA, Certified Management Accountant certification right now. And that is basically what all that is tailored around, right? Is arming the business with data, which is kind of weird because it's CMA, Certified Management Accountant. You would think, what the heck, accountant, data, how do they go together? But that's what it is at the end of the day. Once you stop working in the business and you're working on the business, you're just looking at data and making decisions all day until you ride out into the sunset. However big you want to take the business, you just I'm studying, we look at examples that have hundreds of millions of dollars. It's the same as when you get through that first threshold. You have to learn to pull yourself out of the business, and then you're just looking at reports, looking at data, and making decisions. So the sooner you can get to that point, that's the first thing I would say. The sooner you can get to that point where you're driving your decisions based off of data, the better. Obviously that's not how you start the business. You start the business by just being in it and getting really good at it. And you're making decisions off of data then, but then you hit a ceiling where you can only collect so much data working in the business. So then you have to make that transition that's when it starts to make sense to do all the stuff that we're talking about with regards to understanding profitability and having a holistic approach and taking the finances and pairing that with ops and pairing that with everything else. So yeah, I think that's probably, I would say that's another thing that I could say is my core mission, is just getting financial data for my clients and helping them interpret it. Because it's one thing to pay, a ton of money to have compliance around data, but if you're not actually using it to drive any decisions, then there's not really any point. You hit a ceiling of how much money and value you actually get from a compliance standpoint. You want compliance, that's for sure, good. That's the base of the pyramid. But you also want it to use the data, the financial data, whatever it is, from a CRM, from an ops software. You want to find a way to have a report spit out something that has a few different actionable things that you can do. And I think that is huge. I design a lot of systems and stuff like that for clients. And that's where you have to start. You have to understand, what do I need? What data do I need from this in order for me to make these decisions? You have to work backwards. Then you can design the system and figure out who's putting in the data, what kind of data are we capturing, how are we reconciling and making sure it's clean, how are we cleaning the data, are we putting controls into place, all that kind of stuff. But first you need to start with the big picture things that you said, which is what do I need? What are the big 2 or 3 things? There's usually not that many things you need to know in order to make those big macro decisions, but you got to come to a couple, some people call them KPIs, right? A couple things that you need to be able to take the pulse of the business, and then you design the systems around that in order to collect the data.
Yeah, that's a great point. That was definitely one of the things that in my education growth in my career, one of the things that I was able to identify, like I said, because I could read the numbers, it would help me identify where I would go to find issues. That coupled with my ability to analyze people and my EQ, emotional intelligence, the combination of those two really set me up to be super successful in that industry. But going back to the KPIs, what was key was if you knew what the drivers were for the metrics of those numbers that you're measuring, you could quickly identify what's going to set up for a good store or a bad store. Just sheerly based on, to your point, the one KPI we would measure was traffic. If a store got more than 100 swings a day on average, which would be 3,000 swings a month, we knew that our 15% on average conversion ratio, actually a company average at that time was 13%, but our 13% conversion ratio and the average revenue for KPI, key performance indicators. Thanks, Chris. Appreciate that. On the back end there, he's helping us out. So if I take my conversion ratio times my traffic times my average revenue per transaction, I knew what a store would bring in total revenue. And then based in, my high level metrics of my payroll per hour and my which we knew that on a per store basis. And we knew going in what the rents were and some of the other factored costs. This store should generate $10,000 to $15,000 a month in profit, or this store is going to generate $20,000 to $30,000 a month in profit, right? And being able to identify that on a super high level, you can make decisions like that. And it was the maturity of my understanding of that, taking the base knowledge of the numbers and then being able to apply the math that way made it so that I can very easily make decisions on whether or not. For instance, if we were going to we were buying competitor, and let's say it's at 8 stores in Salt Lake City, for instance, all I'd have to do is get the traffic numbers, confirm that the traffic numbers were accurate, identify that that they track a lot of the same data that we did, right, and that the traffic is accurate. I could just look at a few key metrics, and then I could identify that this is going to be a profitable location with just 2 or 3 key numbers, like you mentioned before. Right. So it doesn't have to be super analytical and getting into the weeds with the P&L and all that kind of stuff. Yeah. It can be once you back out of it, you can get to the key 3 or 4, 5, 6. I say 7 KPIs because there's a lot of ancillary stuff you might want to track. But generally, that's what you need. And you'll know whether or not your store is profitable without having to wait for. And that was our biggest challenge. Oftentimes, you don't get the numbers until 15 days after the close of business.
Sure.
Right. So because the accountant team needs, time to process and put everything together. But if my high level numbers are relatively accurate and I know what they are, I'm going to know within a couple of percentage points how good we're looking. And I think that that's one of the things that try and help business owners understand to work better with somebody like yourself is if you can take the time to help them identify what are those key drivers in the math and the equations, then they know what they can track, which they can get on board with that because it's easier for them to assimilate to.
Exactly. Yeah. And bringing it back to the landscaping example too, you could even just like, how profitable am I per project? How many projects do I do per month? Where do I get my leads from? How just from deciding where you should spend your time on a sales front, right? And then how much time or what is your time worth in these different kinds of rooms? Who should I be talking to? You could even drive those kinds of decisions, just kind of bringing it to more of a service oriented. Sorry, I think through everything through service oriented land. So I just want to paint that for the folks out there that have that kind of business.
Yeah. Well, and as for you and for us, quite honestly, that's a larger percentage than most of the people we work with. Right.
Okay.
So a couple other thoughts. So you say you work with real estate clients. Give us a quick rundown on some of the things you do with some of your real estate clients. What are some of the key things that you see that they miss as far as opportunities, things that they should be paying attention to, and how do you help them specifically beyond your traditional P&L assessments and stuff like that? Yeah.
First one, I mean, it's real estate's its own beast. I am a real estate investor myself. I was telling you this at lunch. I love real estate, and real estate itself, you could have, I know accountants that specialize just in real estate itself. So I'm still in the beginning phases of I would say I have more mastery over service oriented than I do real estate clients. I probably only have, I don't know, half a dozen clients that do real estate, but I've done deals myself and I read about it and listen to it all constantly. But what I would say with real estate, the missed opportunities or kind of the pitfalls that I've seen, one is like, not segregating properties. That, like, I have a client that does operates Airbnbs for people, but then owns one himself, just not understanding that they go on two different tax schedules. So figuring out a class system in order to break those apart, and not only break them apart on the financials, but collect the data that we need in order to segregate those. Because in your head, you might think, oh, this is all the same. I'm operating Airbnbs, but just having the wherewithal to know to work with this, we go back and forth with CPA and understand how to design the chart of accounts and figure out the classing system we're going to use on that front. That's one. Another one is just like, I understand cost segregation and the 4 quadrants of real estate pretty well. So from a conceptual standpoint, once you have clean books, if anybody doesn't have that and I see that opportunity, making sure I let them know, hey, there might be something here. I know a CPA who does cost, or I know somebody who does cost seg studies, and I know a CPA who likes to front load depreciation and help clients with an active real estate designation, just like the stuff that, floats around. No typical bookkeeper typically would know that kind of stuff or have an interest in that kind of stuff, but like getting a cost segregation study onto the books, or knowing how to capitalize something instead of just expensing it if it's a certain above a certain amount. That's a pitfall I see a lot of times. So any kind of the funky stuff that floats around bookkeeping that might be getting taken care of by a CPA at a year end, but for whatever reason, they want it to be, on a monthly basis, have the books tied into the taxes. I think that's probably the biggest thing with real estate, just making sure the books are actually tied into the taxes and vice versa. So making sure the journal entries are done at the end of the year, making sure loan accounts on mortgages are reconciled and we're splitting the principal versus the interest, and that's listed. The assets are listed on the balance sheet appropriately, and the depreciation method is actually accurately reflected on the books. Those kinds of things.
I was just going to say depreciation is a big one in real estate, obviously, because that's part of the reason, if you're an investor, it's part of the reason why you want to invest, is because you can leverage the depreciation, the value that you get from that, especially if you have excess resources that you're trying to protect from taxes, that you want to reduce your taxes. But the key there is identifying, make sure that it's being done correctly, because you talked about accelerated depreciation, which you can absolutely take advantage of. But to be able to determine whether or not you should or shouldn't do that, it's really, you need a holistic approach.
Yes.
What does your overall situation look like? And again, this is where I get frustrated with accountants that don't really take the time. And part of it's just the business model design. Part of it is the discipline, right? And part of it's the client. The client doesn't want to take the time. But if the truth of the matter is if you don't take a holistic approach and really look at, hey, what are you trying to accomplish over the next couple of years? That could very well determine how you should handle it. Like even with business owners, we have business owners that are trying to get financing to scale up their business. And, because they were encouraged to take as many deductions as possible for their tax preparation, they showed a lower profit in the business. Well, then they go and they're like, oh, I want to buy a new house, or I want to buy a building for the business. I'm like, you're not going to qualify for the size that you want because you don't have the profits and losses that you need to be able to represent that kind of a loan. Right. So there's some work that can be done on the back end, but it makes it a lot more convoluted. And again, you have to have that vision. What's the next 1 to 3 years look like? Because that may change how you do certain things.
Yeah, there's a lot of steps that you need to take, like you said, in order to get that. And so you could go wrong in so many individual things and it get busted. One is you have to have a vision for where you want to go. 2, you have to have like the assets and the business that is, supports doing that kind of stuff. 3, you need to be able to have a CPA that not only knows enough to take care of that, but knows enough about your situation. What you said is like, has to do with spending a ton of time with them and them understanding your vision. Then you have to implement it. So then you
Right.
actually have to, it's fun to talk strategy. I know a lot of CPAs like to do strategy, but okay. And honestly, the premium is on strategy. I understand why the premium is on strategy, because it's the experience and everything that goes into it. But I mean, maybe AI is going to take care of that, and the implementation is what, I'm an implementer. I'm a go-getter. Let's get this actually in real life. I know we share that for sure. So like, yes, you could do all the fancy stuff, but like, what does that look like? Like, how are we actually going to capture that? What systems do we have set up to book that on the books and like make that real, and then like deliver things to people and get responses from people and stuff like that? So there's so many pitfalls that can hit where you get snagged on that. And yeah, that's a huge thing. When I see, people who are just in one hole and they're like, yes, let's accelerate all this depreciation and minimize your taxes, but they don't understand the holistic picture that makes you less lendable. And being less lendable can bite you in the butt in other areas if you don't understand. And maybe that's fine. Maybe you don't need to be lendable. Maybe you can save a ton of money in taxes. But that's a lot of people that I know, that's not the only thing that they care about. They think that's all that they care about because they don't understand the repercussions of what that is, right? I started out, I was the same exact way. I was like, once I got on the bandwagon of taxes, like, let me learn everything there is to know about saving money in taxes. I'm not going to spend a penny in taxes. And then I went to buy my first house. I'm like, okay, that is not the game I'm playing anymore. It is a different game. We have to learn how to, first and foremost, it's increase your wealth, right? Then it's like, okay, well then that's the parent category. Save taxes and get assets and build a business are the subcategories in that. Let's juggle those all at the same time, because building wealth is the game and not necessarily just saving money in taxes.
Yeah, it's a great point. And a great point when you say that building wealth is the name of the game. Running a business is just a phase of that, right? It's just a component of that, right? So successfully running a business that's putting off profits is part of your wealth building strategy, because, you might put some money away for retirement, but I mean, let's not be confused. Most people that start a business, I would say 80% at least, likely haven't envisioned themselves selling that business at some point at a profit multiple. Now that's a whole nother conversation that we don't have time to get into today. But the point is that as it relates to that, that if the game is about building the wealth, you need to take a longer strategy viewpoint, right? You can't just look at this year. And if you do look at this year, just know that, to your point, there's consequences to that, because if I need to make a decision to, for instance, if I do want to buy that new home, I need 2 years worth of taxes that look good, that will allow me to qualify to buy that home. So if I want to buy a home now, I need to identify that it takes me 2 years to put myself in the best position to get whatever it is that I'm trying to do, right? And so
if you're going to go conventional, there are P&L and bank statement loans,
there's other ways to
they have a higher amount down,
you're
and
pay more for
then,
it, and it's going to take more. It's going to be more heartache. It's going to be more work, and then you're going to have to find the right person to do that, even, right? Because that's a whole nother skill set that evolves out of that.
Yeah, absolutely.
Appreciate that, Chris. So as we kind of look to wrap some of these things up, there's a few last things I want to kind of touch into, and I'm sure we could have gone on for another hour or two at least. Mm-hmm. But as we kind of think through some of these things, one of the things that I thought was really valuable for us to consider is when you talk about bookkeeping as a solution, accounting services in general, knowing when to outsource, and you kind of touched on it, but I think is there a number? Is there an investment point, right? Like I bought equipment, now it probably makes sense. I've exceeded 100,000 in annual revenue. Is there some guidelines there that you could use that somebody could kind of look at and say, okay, now is the time to call somebody like Chris?
Yeah, 4 things come to mind. A gajillion things come to mind. I'll touch the first 4.
Okay.
The first 4, one is if you are converting to an S Corp and you don't have confidence over having your double entry accounting system set up where you have clean financial statements. That's the one I see people run into most. Most CPAs say around 40, 50K net is when it makes sense to go to an S Corp where the tax savings outweigh the increased tax prep costs and the payroll costs in order to be compliant. So that's the first, I would say, thing that people run into. If you're struggling with compliance on the 1099 front, so collecting W-9 information and issuing your 1099s to your 1099 NECs to your contractors, that's another one that you might run into, where it makes sense to outsource bookkeeping. Another one is where your time that you're spending on the bookkeeping, that time could be spent better in working in or on your business. Which
Yes.
I try to make that argument for most people. That's the one that I think almost everyone is in that boat. However, people don't necessarily see that, or they don't trust it. And also too, like, I totally understand it, because people might preach that, but to actually deliver on that, like to actually save somebody 5 hours a month on bookkeeping is a tall task. And they might say that, but you need to actually have the systems and the staff to back it up. So that's another one that I would say people run into with bookkeeping, or if it just doesn't fill you with joy. Like if, I always tell people, if they really like numbers and they want to turn themselves into the bookkeeper, go ahead, go for it. It fills me with joy. I do my own books, my business own books. I could outsource it, but I don't. I love it. So if it's like, that's what we get into that's why we start businesses, is because we want to do the stuff we love. So if you find like it's draining your energy to sit down and do books, then yeah, outsource that sucker right away.
Yeah. That's a great point. My first business, ice cream distribution, I used to service 7-Elevens, AM, PM, stuff like that. I remember I would have all the invoices, all the receivables, all the information. I would pre-buy inventory, and because I had just come out of my accounting courses in high school and then in college, and I was very familiar with it. I was like, oh, I don't need to pay somebody to do this. And I would sit there, but here's what I would do. Like any good entrepreneur, I put all my time and energy into running the business every day. And then that stuff would just stack up. And then I'd go, okay, it's been a quarter. I need to reconcile. And then I find myself taking an entire weekend where that's all I do. And then I'm miserable and hating it. But I would keep in that cycle. And for 2.5 years that I ran that business, that's what I was doing, right? I was constantly waiting, and it would be like stacked up 2, 3, 4 months at a time. And that's when it was really unbearable, because I couldn't build it, because, just the day-to-day of running the business, it was a lot. It was 12-hour days lots of time.
That's a great point. That would probably be the fifth one that I would do, is if you need just somebody to hold you accountable and have a monthly close system where maybe you think you can, but you can't. Like you said, you're in that situation where you tell yourself, I'm going to do it, but you just can't get yourself to be held accountable. A lot of times that's why people hire me, is they literally just want somebody who's going to send, it's their responsibility to send a transaction. If it hits the bank feed and we don't know what it is, I will not let it go more than a month without sending it to a client. And if you can keep things within a month trailing, you can generally, it's a quick email, right? That's like, oh, there's for this. But the second it falls out of that 1 to 2 to 3 month range, you won't remember. And then it just becomes a nightmare from there. So that's another great point.
Yeah, absolutely. Awesome. All right, Chris, what else? Any last kind of thoughts or comments you want to share?
Any last points or comments? I would say, my from the top of the rooftop, I'm always shouting to people to be more financially literate and more financially educated. Talk to business owners, other business owners that are in your space about your finances. I've heard on this podcast, or I've heard on podcasts over and over and over again, that rich people talk about their money more than poor people do. And so I would strongly, strongly urge you to find 3 or 4 other business owners in your space and talk about your financials. Like it's, like be an open book. It doesn't matter if your ego hurts because you're making a quarter of what they're making. Just openly talk about your finances. That's a great way to increase your financial literacy. Then you have that to draw from. Then you can take those questions, go to your accountant, go to your bookkeeper, pop around. It's a growth, and it's a muscle that you have to flex. So just flex that muscle as much as you physically can.
Yeah, that's a great point. I love that. I know. So the last company I worked for, the last wireless company, the owner, the CEO, there were 3 owners, but the CEO, obviously a mentor to me. I learned a great deal from all 3 of those owners. But I remember I met with him just a couple of years ago, and I was telling a little bit about my coaching business, and it was before it's become what it is today, and certainly before I had the insights that I have now. But what was interesting is that we're having the conversation. Actually, some of the things that I've begun to implement have been extensions of the conversation that we had. But he was sharing with me because he took the money that he's made over his career, and turn that into a family fund where they actually buy other businesses. So part of my conversation with him was like, if you were going to buy a business, what would you be looking for so that I know what I can lead my clients, right? If I could help them move that process. But anyway, the point is that he was sharing that he was part of a mastermind group that they met, I believe he said once a month. I'm pretty sure it was once. It was at least every other month. And he would fly to Phoenix from Salt Lake City where he lives. And he would, they would do that every month. They would have two people that would go up and literally they would do a presentation of their P&L. Their personal P&L, like this is where we're at. This is where my money's invested. This is where I'm spending my money. This is where, and they would go through that. And to your point, even though he wasn't, they still operate a business. He owns a family fund with his kids, and they run that every day. But this is for everything, personal and business combined. And what would happen is you'd stand up there and you do the presentation. Then people in the room would critique it. They would give you feedback. Right. And not critique it in the negative sense, but so much as, they would ask you questions about it. And I remember he told the story of a woman who was up there and she was from Oklahoma and she made money, her money. Oh, by the way, you had to be worth at least $50 million to be in that room. It had to be worth.
Can't wait to be in those rooms.
Yeah, right. Exactly. That's what I was thinking. But you had to be worth $50 million to be in the room. So anyway, the woman gets up there and she's like, I can't tell you where my money comes from. I can't even tell you where I spent the money. I was like, I'm not sure if that's a blessing or a curse to be at that point in my life. That I can just show up and I have whatever I need whenever I need it for whatever I need it for. But I don't know that I'd ever be wired that way. I'd have to know, it's like,
exactly. Yeah.
Yeah. But anyway, I think some of us are born with that curse regardless. But it was a great takeaway though, because to your point, having that understanding of you, yourself, your business, your personal circumstances, that education component, I felt like I had myself pretty well dialed in. And then when he said what he was doing and what the expectation of this group was, this mastermind, I'm like, wow, I gotta level up my game, because I don't have it. It integrates both my personal and my business, and like a scorecard, so to speak, to really measure all of that. And then, the asset classes that I'm in, I'm like, I need to expound on that. And I learned a lot from that conversation. So to your point, the fact that they were standing there open, full kimono, all right, open kimono and shared everything good and bad about where they were. Talk about financial education on the highest degree. It was pretty impressive that he even at that stage of his career, he's still doing that.
Yeah, absolutely. I think it's super, super important, and keeps you humble too, right? You always want to be around people that are a few steps ahead. Keeps you humble, gets always constantly learning from them. And so, I think that would be my final note to business owners is just go be with other business owners that are doing similar things to you. I think the natural tendency is to run away from those because they're not necessarily going to be the best referral partners if they're serving the same clients or stuff like that. But there's value you can squeeze out of every person, every conversation. So that's the value that I would definitely squeeze out of those other fellow business owners that are doing the same things and have the same mindsets. Yep.
Great point. I love it. All right. Chris, how do people get a hold of you if they want to learn more about how they can work with you?
Yeah, I got my website, kernatconsulting.com. I've been active on LinkedIn recently. You can just follow me on LinkedIn at Chris Kurnat. My email is chris@kernatconsulting.com. All of the Kernat consulting things. That's how you find me. Not many other Kernats out there, so should be pretty easy to find me if you type in my name or type in my business name.
Outstanding. We'll make sure we have those in the show notes when we go live with the show.
Awesome. Thank you so much for the time today, Eric. This is great.
Absolutely. Yeah. Love sharing time with you, Chris. Thank you for your insights. Very, very well thought out, great ideas, great concepts. So thank you for taking the time to share that, and look forward to having you back on the show here in the future.
I appreciate it.
Awesome.